Good afternoon once again, everyone, and welcome to our first session of the W.I.S.E Webinar with the topic of how to make your money work for you, where we'll be focusing on passive income as a whole. So here I'm with my colleagues. Everyone is going to introduce themselves. To start with, my name is Yvonne Mnitafu, and I'm the Marketing and Communications Associate.
Good evening, everyone. My name is Naima Dungur. Good evening, everyone. My name is Vanessa, and I'm a service officer.
Good evening, everyone. My name is Irene Monjati, and I'm a credit administrator.
Good evening, everyone. My name is Queen Kimambo, and I am assistant to the head of finance. And welcome and thank you for joining our webinar. And we are happy to have you here as we are going to dive into seeing how to make your money work for you and all the way to passive income, different importances of passive income, different types of passive income, and how is it important, all the ways for you to start building your passive income. We are going to discuss all those, and I would love to welcome as we get into the details. So if you're joining us for the very first time and you're wondering what W.I.S.E is, so W.I.S.E is an abbreviation that stands for Women Investing in Securities Education. And this is, I think my screen is not moving yet. Sorry.
Your screen.
Sorry, my screen was a bit stuck. Can you please let me know if you can see my screen? You see this one?
Yeah.
Okay, thank you. So if you're joining us for the very first time and you're wondering what W.I.S.E program is, so this is a program initiated under iTrust and with the aim of empowering women by providing them education and right training in order for them to be able to make informed decision around the investment avenue and the financial market as a whole. We have our long-term vision, and our long-term vision is to increase the number of women who actively participate in the financial market. And we believe this education is going to empower women so that they can be also confident to engage themselves in the financial market. So we provide various training, like this program is one of the examples of those programs. We believe that when women are educated, they can be able to actively participate in the financial market. And when a woman is educated, also the society is educated. So while achieving our long-term vision, alongside we have different purposes, and one of them is bridging the gender investment gap between a man and a woman. And we believe through education, a woman will be able to make informed decision about their finances. But also through education on the investment avenue, a woman will be financially literate and empowered, because we believe when you understand different areas of investment, you can align them with your goals. And when you align them with your goal, it's easy for you to choose a strategy that will properly align with your goals. And at the end of the day, you will make your financial goals come to pass. But also, one of our purposes is to remove fear of investing. We know when you're fearful, when you don't have a full information about an investment, you become fearful. We can take an example of the stock market. We have seen a lot of people, when the prices go down, they panic. They want to sell their shares even at a lower price, more than the price that they bought at. It is because some of them are not well informed. So we believe when we provide education to women, we believe that they're going to make an informed decision. And whenever there's these variations here and there, they won't be afraid because they do understand how the investment is operating, so it won't be a fearful news to them. But also, we are going to provide financial independence. I mean, their women investment is going to provide financial independence to them and security, as we can all relate in our communities that women, number one victim of, for example, we can say a lot of family issues, for example, divorce. But we believe when a woman is financially independent, she can maneuver well in terms of taking care of the kids or even themselves upon any separation whenever it happens. So through achieving that, we also have different values that one of our core values is to empower. So empower is through education, but also inclusivity. We also ensure that a woman is also given an opportunity to engage in the financial world as how men are. We can also testify that this field is men-dominated field. But one of our core values is to ensure that a woman is also included in this avenue without looking at the agenda or having an idea that this is a woman. No. Also, a woman has to be included. But financial literacy through education, we believe education is going to empower a woman to have a right knowledge. Also, independency, especially financial independence, you're going to be independent. Yeah, as well as integrity and ethics. Okay, now welcome to our main course session of today, where we are going to discuss about passive income. And around this whole session, we can have this question in our mind: are we working for money or your money is working for you? This is the whole idea or mindset across the passive income. It's actually to make your money work for you instead of you working for money for the rest of your life. We have seen this word even in our posters, passive income. You could be wondering what passive income is. So passive income is actually an income that you earn without your day-to-day participation in generating that income. We can take an example. Whenever you are an employee of a certain company, you need to show up to that company every single day, Monday to Monday, January to December, for you to be paid that income. But passive income is contrary to that. You don't have to show up to that office generating that income day to day for you to qualify or to be part of beneficiaries of that income that is created by that investment. So passive income does not involve you showing up to that office every single day for you to qualify to be part of beneficiaries of that income. Yeah, so let's now see different types of passive income. So we have different types of passive income, but today we are going to dwell around those which are available in the capital market. So one of them include dividend from stocks. So we know when you're investing in stocks and that company generates profit and it declares that it is going to distribute dividend for that year. So the moment you're invested in that company, you become one of the beneficiaries of that profit whenever it gets distributed. For example, you bought shares of CRDB, and CRDB makes a profit for that year and announce that they're going to be paying dividend. The fact that you're an investor of CRDB, you are liable to get that income. And we know in stocks, there are 2-3 ways now you can benefit from investing in shares. One of them is capital gain. Whenever the price that you bought at goes up way above to the price that you bought at, the capital gain is going to be your income. And dividend is going to also be part of your income that you'll gain from investing in CRDB stock. And it does not mean that you'll have to go in any of CRDB branches to go and see now how are all clients in a queue or are all employees there on time. No, you just have to buy CRDB shares and you're there waiting. You could be somewhere else doing whatever you want to do, and your share price, whenever it goes up, you are going to be liable to get that income. But another passive income, another type of passive income is interest from bonds. So this could be government bond or corporate bond. So for government, it's just that you buy a bond from the government, like you lend your money to the government, then the government use the money to do its different activities, and you will be paid your interest twice a year. So for example, you're invested in a 20-year bond and it's giving 15% interest a year, twice a year. So you will just have to invest in this bond and you will be there waiting for your interest. You don't have to do anything else for you to get that interest. You could be doing something else, taking care of your family, doing something else that you like. You will receive that interest either way. Another place is mutual funds and ETF. Like the like of our funds here, we have iCash Fund, we have iIncome, we have iGrowth, we have iSave, we have the ETF. So for example, you had invested in our funds when we are at IPO, for example, in iGrowth. You'd have gotten your units by 100 shillings. But as for yesterday, the NAV of iGrowth is 199. So you could have seen if you had kept 1 million by an EV of 100, it is now 1,999,000. So you could see there's nothing that you had done for you to generate that 900. You simply had to invest in iGrowth and wait over time for your investment to grow to give you that return. Yeah, so another one is the digital products. We can see that like the like of ebooks, you prepare a book, you put it online. Whenever someone wants to access that book, they'll need to pay a certain amount of money, or you can create an online course, could be a webinar like this. Whenever someone wants to access this webinar later on, they can pay some amount and they get an income. So you're not going to be there every other time to do a live presentation, but this one that you have already recorded can also be listened to other people even 3-4 years to come, and you'll still be earning through this course. Another one is rental income. For example, you build your houses, either for people rent them for business or for accommodation, like so one of the biggest importance is financial freedom, that you can handle your life without worrying about finances. If you want to buy a thing or you want to travel the world, you're financially free and you can make financial decisions because you're capable of doing it. So for example, you want to, let's say, to travel, and you choose to put let's say in the next 2 years you want to travel, you put your money in iGrowth, it grows as you keep on waiting for that time. By the time it reaches, you're going to be able to financially ready to do whatever you want to do with your trip, because you'll be there with your with your money that will allow you to do those financial decisions, because you're free. And over time, you're going to build this all the way up to for example, we have seen people who create they structure their investment in such a way they can even make work optional. So for example, you will establish an amount that you will need as a monthly expenses, and you choose to build that income over time. So for example, invest in iGrowth, for example, iSave or iIncome, then to reach a point where you can get your monthly income from your passive income. Then you can choose, now I can stop from actively making money, or you can choose to quit your job because you're now financially free. Your bills can be covered with your passive income, and you go do something else that you like in the community. But another importance is wealth creation over time, because as you invest, you keep on increasing your wealth over time. So for like the example that I've given on iGrowth, if you had invested at IPO at 100 shillings, it is different from now, it is 199. So you could see how your investment will be growing or your wealth will be growing over time. But time flexibility, so time flexibility comes when you have been able to create passive income where your monthly expenses can be paid by your investment. You don't have to actively come to work from 9 to 5, Monday to Monday, for you to generate that income. So the moment you're at that stage, you can say you have time flexible. Your time from 9 to 5, you can use it to do something else without worrying about your finances. Yes, but another point is early retirement potential. So for example, you could say, I need, let's say, 2 million every month from my investment for me to retire. Because retirement now is no more about age. You can even choose to retire when you're 35. You just have to structure your systems to give you your investment systems to give you your monthly expenses. And the moment you're comfortable that that amount is going to be able to cover your monthly expenses, you choose to retire. And you go do something else that you like in the community, whether being spending time with your family or doing an activity that makes you happy, even if it is not making money for you. Now, you could be wondering, okay, if that is the case, how can I start building my passive income? This is something that iTrust is really happy to do for you. And we are here to hold your hands every step of the way to make sure that your financial goals comes to pass. So number one, you'll have to assess your financial situation. So it's just like doing budgeting, understanding how much are you making per month and what are your expenses per month, and see if you're able to save. And it is really good if you can make this gap between your income and expenses as big as possible, because it is going to put you in a place where you have a lot that can be saved and invested. So the first step is to do your little analysis and see, am I able to save? But number two, you'll have to build your emergency fund. So emergency fund is very important because it is going to give you a cushion for so that you can leave your investment to give you the return that you need, or to allow your investment to grow, to make the financial goals that you had set for yourself come to pass. So how is emergency fund is a fund that you set aside in case of any emergency arise. You are able to financially cover for your emergency. And we have a fund like iCash. iCash is a fund that you can use to put your emergency fund. We'll discuss about it as we are going, but you take your monthly expenses and you have that amount saved up to 6 months in a money market fund, like of iCash. So the moment you have your emergency fund, you can now dive into investment, because any investment that comes, you want to go sell your shares, or you want to go redeem your units from the funds, or you want to go sell your ETF shares, because you have an emergency fund set aside to cover. For example, you say, now I want my investment to make me able to retire at 40, for example. Then you'll have to choose systems or investment systems that are going to help you retire at 40. And it'll also going to give you focus. It won't be easy for you to be moved around investment. Someone will tell you today, ETF is good, now you want to invest in ETF. Or someone else will tell you, no, you could buy CRDB shares, you could be making 100 million by now. No, you're going to be focused, because you know what I want my investment to do for me is to allow me to retire at 40. So if shares are going to get you there, then you'll stick with shares. If mutual funds is going to get you there, you'll stick to one investment strategy, because you already know what are you looking forward around your investment. But also it is important to assess your risk tolerance. according to your goals and your risk appetite, where are you comfortable to invest? Because if you are not, if your risk tolerance is, let's say, moderate risk, you're going to choose an investment that is risk moderate. You're not going to choose a high risk investment because you already know my risk tolerance is moderate. Yeah. But number 4 now is to start small. So after you've done all these 3 steps, you are going to be able now to start. And here as ITAS, we are happy that we are going to help you now step by step of the way to help you understand where you can start, how you can start. And it's good that you start with an investment that is manageable for you. Because we understand that as you're starting, you're not going to know everything instantly. You're also going to grow as your investment grows. So we are going to give you an advice of where you can start comfortably as you're also growing your knowledge around investment. So you can also open your mutual fund account or CDS account with us, and we are going to guide you through on how you can grow your investment and to make your financial goals come to pass. So here are different places you can consider investing in according to your goals. You can choose to invest in the stock market. Here at ITRAS, we have our department, which is an advisory department. They do analysis for different stocks. So we are comfortable that we have a team that is going to help you understand the stock market and choose a place you can invest. But we also have our regional desk. We also assist our investors to invest in the DSC markets, Nairobi Stock Exchange market, Rwanda and Uganda. And we are looking forward to expanding more. So here at IT, you can choose us as your broker, and we can help you to dive into this investment, and you make your financial goals come to pass. Also, you can use us as your broker if you want to buy a bond. We can also assist you to buy government bonds, corporate bonds, and we also have our own products, which is the Sukuk products. These are for those who would like to invest in Sharia compliant area. We also have our Sukuk bond. But also, we also have our funds. We have a total of 7 funds by now. We are going to see one after the other. So we have our iCash fund. So this is a money market fund which invests much in treasury bills called deposit, as well as short-term treasury bonds and corporate bonds. So this is suitable for those investors with low risk appetite, or those people who want to park their money for a short period of time. For example, you want to pay for rent, or you have any other short-term obligation that you want to settle in a near future. You can put your money in iCash while you're waiting to settle your obligation. And even your emergency fund. This is a perfect fund for your emergency because no exit fee in this fund, and you can get your money within 3 working days after making after filling in your redemption or submitting your redemption request. So the minimum investment in this fund is 100,000, and whenever you want to add subsequently, the minimum amount is 10,000. We also have our ISEL fund. So this is a fixed income fund which invests in a diversified portfolio of long-term treasury bonds. And this is also suitable for clients or investors with low risk appetite, but they wish to grow their investment over a long period of time. Yeah, so this fund, its minimum investment is 100,000. But this fund has an exit fee of 1%. And whenever you want to increase your investment over time, you can add to a minimum of 10,000. So another fund is iGrowth Fund. So this is a balanced fund, which invests partly in long-term treasury bonds, as well as stocks or equities. So this is recommended for investors who have a moderate appetite risk, and they want to grow their investment or their portfolios over a long period of time. A minimum investment for this fund is 100,000, and subsequently, again, you can add from 10,000. Yeah, so also this fund has a minimum, an exit fee, and whenever you want to when you want to add subsequently, you can add at a minimum amount of 10,000. Another fund is an income fund. This is also another fund, another fixed income fund, which invests in diversified portfolio of long-term and medium-term treasury bonds. So this can also be recommended to low-risk appetite investors who want steady growth, but also who are looking forward for distributions. So the minimum investment in this fund is 10 million, and subsequently you can add from 100,000. This fund also has an exit fee of 1%. This can also be used as a minimum retirement plan. So you can be given distribution every month. So if you want to structure your mini retirement, you can also use this fund to serve that purpose. Another fund is Iman Fund. So this is a Sharia compliant fund which invests in those areas which are Sharia compliant. So if you are an investor who want to only invest in Sharia compliant fund, this is a fund that is suitable for you. You can invest in our Iman Fund. Minimum investment in this fund is 100,000, and subsequently you can add a minimum of 10,000. Also, this fund has a 1% exit fee. So another fund is iDollar Fund. This is a money market fund, and it's suitable for those people who like to park their money in dollar. You can use iDollar to park your investment as it grows also steadily. This is also invests in diversified range of fixed income instruments with focus on dollar denomination assets. Yeah, so the minimum investment in this fund is 100,000. Is 1,000, sorry, and subsequently you can add a minimum of 100,000. Yes, and whenever on redemption, it is T+5. These are the funds I've mentioned: iCash, iIncome, Iman, iSave. These you can redeem into T+3 days, but iDollar it is T+5 days. Yes, and it also has a lock-in period of 90 days. Yeah. So there's also a quote I always see says that the best time to plant a tree was 20 or 30 years ago, but the best time to plant it, another second best time to plant it is today. So you're not late. You can always start the moment you get the right information. That is the best time for you to start. So thank you so much for listening to us. And I would like now to hand over the mic to Yvonne in case of any questions. We can answer the questions. Thank you again, and welcome, Yvonne.
Thank you very much, Queen. The session was very, very insightful. I believe we have been able to gain more information about passive income, where to start, how to start. If you would like to open an account with iTrust Finance, you can easily do it through our website, www.itrust.co.tz. Our website, www.itrust.co.tz, and you'll see the application forms text on the menu bar. You fill in the form and it will be submitted for KYC approval. Once done, you'll receive your customer number and you can begin your investment journey. So we have a few questions on the anonymous chat bot. I see Irene, you say that you have a question. Yes, please. Would you like to speak out the question or would you like to write it down? Okay, as we wait for Irene to confirm, there is a question. It reads, how can one decide on what stock to invest in the Dar es Salaam Stock Exchange? So the question is, how can one decide on what type of stock to invest in the Dar es Salaam Stock Exchange? My colleague Neema will respond to the question.
Just to answer the question, first of all, you need to know the goals that you have, because we do have some stocks that are listed in the exchange that do pay dividends, and there are some that do not pay dividends. So you need to know, am I looking for a company or a stock that is paying dividends or not? The second thing is you would want to target stocks that are blue chip stocks that are actively trading. Kwamba the activity of the stock in the exchange is high. You wouldn't want to stick to a stock that is stagnant for a long time, because we all know that investing in stocks is you investing for the long run, not the short run. So I'll say you have to focus on whether the company is paying dividend or not, and you look for companies that are regularly trading, not stagnant.
Thank you, Neema. I hope the answer is clear. So we have another question. Can foreigners make an investment, or is it only for locals? I believe my colleague Vanessa will take over the question.
Yes, so in terms of investing in our funds, we welcome foreigners to invest with us as well. What you can do is fill in the application form as Ismail said on our website, and you will upload your ID. So we accept passports as well, and we'll just continue with the process. Just make sure when you're filling out the form, make sure your phone number that you use matches the country of residence you're in. Yeah.
Thank you very much, Vanessa. I believe that is clear. As she has stated, you can easily go to the website and fill in the application form. It's open for also foreigners. So another question is, how do I decide when to sell my high growth units as the NAV is on the downwards trend? I mean to lock in the profits, although my goal has been for long term. So the question is, how do I decide when to sell my high growth units as the NAV is on the downwards trend? I mean to lock in the profits, although my goal has been for long term.
Thank you for a very good question. So when I was explaining about the funds, a bit like stock because it is also investing in stocks. So it is normal for NAVs to go a bit down sometimes, and it also go up when the stocks also does good. So going up and going down of NAVs is a normal situation due to the nature of the investment of the fund. So if your goal is a long-term goal, you don't have to do anything. So what is the best thing actually to do right now is to invest more, because the NAVs have gone down, so you're able to get more units with your cash more than when the NAVs are all going up. So my advice to you will be to invest more, and you won't do anything until your goal or the goal that you say is a long-term goal come to pass. So you'll only do anything or sell your high growth units whenever your goal come to pass. Unless otherwise, when the NAV goes down, it is an opportunity. Please buy more.
Thank you very much, Queen. I hope she has been able to answer your question. So the following question is, what is the rate of the return on investment? So Mr. Gyunda, could you clarify, would you like to know the return of investment in the funds, like the funds that we have, what return do you get yearly, so as we can break it down to you easily? So as we wait for Mr. Gyunda to type, there's another question saying, it would be good if you could be more transparent on the interest rate, at least provide a range because we understand that it can go up or down. I am particularly interested in the iDollar fund. Yes, so my colleague will take over. So, okay, I can answer this question. So we did not write the interest rate on the presentation because we cannot specify. We're estimating the returns. So for instance, for the iDollar fund, the interest rate ranges between 4 to 5% a year in returns for the iDollar fund. So I hope, Stella, I've answered your question. Another question from SNAT. Can you explain the current volatility? So I'll let my colleague Neema to take over the question.
Okay, with your question, I would assume you're asking the current volatility of the stocks. Could you please confirm?
Yes, similar stocks.
Okay. For the stocks, so by nature, the shares slash stocks, they're usually volatile, and that's why investors are advised if you want to invest for the long run, you have to focus on stocks. So as of now, we've been seeing the market trend in the Dar es Salaam Stock Exchange going downwards. And this is because many of the sellers have been offloading, meaning they have been selling quite a lot, and that has led the prices of the likes of CRDB, iTrust ETF going downwards. And this might be because right now we are in the holiday season, so people need money for different purposes. But also, most of the investors are currently waiting for dividend announcements. And usually in the stock market, once the dividends have been announced, that's when the stocks start rising. So for me, I would advise anyone who's seeking to invest in stocks or start investing in stocks, right now is a good time because the market is moving downwards, and we know you buy stocks when the prices of stocks are going down, and when the prices start moving upwards, you start selling.
Thank you so much, Neema, for the clarification. I believe, SNAT, we have been able to answer your question as requested. Gunda, I've seen your comment. Okay, thank you very much. And another question is, what are the interest rates for iGrowth and iCash? So for iCash, the interest rate yearly ranges from around 12%. And for iGrowth ranges around 10 to 15% a year. Yeah, so another question is, the total iGrowth amount invested has reduced drastically from 209 billion to 196 billion in just 3 weeks. What has happened? Are people selling off, or what is happening until when? Could this also be the cause for NAV going down? So my colleague Queen will help us answer this question. As she answered previously, she'll just reiterate what she said before.
Okay, so he said AUM, eh?
Yeah.
Okay.
The amount invested in reduced, what he invested, and the value of savings.
Okay. So in terms of prices, in terms of NAV, I think I've responded to that question, which was asked by somebody else. So in terms of amount invested, we can also say also Neema has touched that point on stock. So the amount invested can also reduce whenever there is redemption. So like we said, this is a holiday season, so people also need money. So redemption also tend to reduce the amount invested. So probably that could be the biggest reason for reducing of the amount invested.
And just to add from what my colleague Queen said, as she explained, the nature of IGOT is a balanced fund, meaning we do have some portion in stocks and we do have some portion in bonds. Yeah, so as I've explained, the stock market has been moving downwards, and there are some stocks that we have invested in, and we have seen the prices moving downwards. So naturally, the NAV too would move downward because the underlying assets of IGO are stocks that are moving downwards.
Thank you very much, Neema and Queen. We have another question. The ETF price at DSE is almost nearing the NAV price. What is the possibility of the price to go down below 1,000? How does iTrust intervene? I'd like my colleague Neema to answer this question.
Okay, I'll touch on that question, which is a good one. We have been seeing the ETF price going downwards, and this is because most of the holders of the ETF have been offloading. And this mainly might be because it's the holiday season and people do need money. But also there is a thing called herding where people do sell by following what the majority of investors are doing in the market. And touching on the fact if the price will reach NAV, the possibility, the likelihood is, as of now, is low, not high. And this is because iTrust, as the AP, we are working to somehow try and stabilize the price and make sure it follows the daily NAVs that we usually post daily in our website. So iTrust, as the AP, is there to stabilize the price. When people want to sell and there are no buyers, we try and provide we try and buy the units, and when people want to buy and there are no sellers, we'll be there. So we're there just to like create liquidity in the market.
Thank you very much, Neema. I hope, Mr. who've asked the question, you've been answered well. So we'll finish up with the following two questions before we wind up our session. The other question is, will the current drop of share price affect the dividend? Neema, you're welcome.
Okay, so share prices and announcement of dividends are not linked actually, because for a company to announce their dividends, it usually depends, mostly it depends on the performance of the company. So the dropping in price will not, mostly won't affect the dividends that will be announced.
Thank you, Neema. I believe you've been able to answer your question, Esnat. Our last question reads, which of your funds has the highest interest rate? And the fund with higher interest rate, what is the rest? What is the rate, sorry? Which of your funds has the higher interest rate? And the fund with higher interest rate, what is the rate? So the fund with the highest interest rates is iGrowth, which ranges between 10 to 16%. And we launched these funds back in December 2024. And when we closed the 2025 year, the iGrowth Fund closed with a return of 45% in just a year. So it's one of our best performing funds, and it was the best performing funds among all other funds in the market as of the year 2025. It's a fund that is it's also a fund that is risky because the shares are involved. As you know, shares tend to go up and down. So even when the shares tend to decrease, it means that even your investment is affected in one way or another. But the bond is there, of course, at least to kind of like carry it on. But that's how iGrowth works. It's a good fund, it's a best performing fund, but it also has its risks. So if you're a person who you're a risk bearer, then this fund is for you, because the higher the risk, the higher the returns. Okay. So thank you very much. Thank you everyone for joining into this webinar. We appreciate a lot. And we're gonna have the Kiswahili session at 5 p.m. If you'd like to also join the Swahili session, you're very welcome. If you have any questions, you can call us. Our phone number is over there. You can send us an email, or you can visit our offices. Have a good evening. Thank you.